All right. Thanks, Ivan. All right, guys. Always good to have him on. Ivan, you can see why he is great for trading coaching. He's just very down to earth, and I always appreciate having him on. He has a good, practical, no nonsense. It's the Norwegian in him. He explained to me a while ago when I first met Ivan. I didn't fully understand, that there was a cultural difference, where Ivan is just very straight to the point. And I kind of am too, but not nearly as much as those Norwegians, man. I don't know about them. Anyways, just kidding. We love Ivan. Anyways, guys, we got Chris Pulver taking over the show here just after this. Going to take a quick break and then let him take a look at some markets with you guys, talk some charts, talk what's happening. Again, stocks down lower again today, down 2.5% for the Nasdaq, 1.6, 1.7 for S&P 500. Gold still doing its thing. It's holding steady. And again, it's all about relative performance for me personally. So gold being flat today, I am okay with flat when the market's down. We'll see if we can get gold to break out, though. I'd love to see it take out those highs and push higher from here. VIX up to 13, up 14% today. Look at that. VIX at a 26.6. 26.6. I might need to go look at some opportunities to sell some premium here today at these levels. We'll go see if I can find some stuff on that. If I take any trades, whether it be FX, indices, commodities, I will be sharing them inside of our Discord server. And if you don't have access to the Discord server, you can sign up currently for 35% off. And what we'll do here is we're going to extend that. If you like Chris Pulver's stuff, we're doing a 35% off discount on all memberships, whether it be our group or the Pulver Alerts add-on. If you don't have that, you can get 35% off. Here's how you can do so. We'll drop a link here in the chat. If you speak directly to our support team, they'll hook you up while the stream is going with a 35% off discount to our memberships. You can see every trade sent directly to your phone and desktop that we take in full detail, explanations. You can read along with our journals and why we're taking the positions. And again, we'll extend that also to the Pulver Alert service, which is also available for members to take advantage of and see Chris Pulver's trades. All right, coming up next, we got Chris Pulver taking over the show. We'll be right back.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Monday. I just am getting a screenshot up and running with a new trade getting posted in the Pulver Alert section. So have a look at that. If interested, I'm just selling some premium on the SPX. So we are sitting up with the implied volatility rank that I have on Tasty Trade around 51. That is quite high. The last time I saw it that high, that high was with our decline from July to August of last year. We crept up into like the 60s when this market was dumping over the weekend. The one thing I keep looking at is I actually measured this out just to be, I was curious this morning, take the length of that decline. Oops, let me use a different color here. Take the length of that decline from July to August and match that from these recent highs, and it's pretty close. So let's grab the measurement tool. That move was around 9.7%. And from the recent highs down about 9.7%, that would be pushing close to like the 55.50 area on SPX. So just keeping a close eye on this. I still go back to, we have April lows, we have August lows. I think this is a pretty good technical spot. The market's clearly trying to flush and test these lows again. I was pretty excited. Like Friday, I was out of the office, but it was nice to see the market closing, higher off the 200 moving average and actually take out the intraday high. But that was just wishful thinking because the market today so far is still flushing a little bit lower back down to those lows from Friday. What do we have on the dock this week? The docket this week, it's inflation week. Now, a couple ways to take a look at this. Of course, I don't know. There's no crystal ball here, but this is in the area that I think the market is willing to show at least a recovery. Maybe it's a short-term bounce. Maybe it's a dead cat bounce. Maybe it is just get the heck out of trouble position. I do have some hedges that are still going, which I'm fine with those. Like that is MES here. A lot of my MES positions. Right now I'm up around $3,700 on some hedges, and I've got an ES trade that's up another $1,600. So I do have some hedges running. I closed out a bunch of my SPY hedges. I closed out my MES and ES hedges last week. I have some fresh ones that are still running out to April and May. So I'm going to keep a close eye on those. I'm selling some premium today. I'm selling some premium out 40 to 50 days. But I want to talk about a couple technical levels. April, August, and we're at the 200 moving average. A couple things, just textbook overbought, oversold conditions. So what I'm noticing here on this is a MACD, is, we are making some fresh lows and we are getting some divergence on the MACD oscillator. We're also coming into some really nice relative strength oversold conditions. So the one thing that's going to be difficult and it might be tough to time, when we had this correction, all we did was we pretty much came down to the RSI 30 level and then started to go back up. I think the hard part is going to be spotting divergence, meaning this: if we go low in price and then lower low in price, if there's divergence there, then that could also signal a bottom. This week, I think with the lineup of news, it might be a little bit more challenging. A couple things with news this week. Trueflation is a third-party inflation measure, and this did time the market pretty well by showing that when the inflation bottomed back here in September, it started to go higher, and that's exactly what the Fed data ended up following as well. So we had the lowest point of inflation was in September of last year, but since then we had that complete complete like cluster F of the Fed starts cutting rates and the bond market prices in something very different. And we saw that inflation started to get stickier and higher. We saw 3, 4, 5 months of prints in a row. You can see that also on your Edge Finder, looking at your inflation data. So if you go to your inflation data, your year-over-year CPI, it's forecasted to be this week. I'll look at the Bloomberg economic calendar. So CPI is going to be the big one for headline readings on Wednesday at 8:30 a.m. Year-over-year CPI, previous print was 3.3, forecasted 3.2, and that's core CPI. So core CPI year-over-year 3.3, forecasted 3.2, and the year-over-year CPI 3%, forecasted 2.9. So the market's looking at a slight improvement. If it is not a bigger improvement than that, I'd be a little bit surprised. This is what I'm talking about. We have seen from the September levels here, Trueflation called that bottom in September, and the market's been going and experiencing higher inflation ever since. So that's 1, 2, 3, 4, 5 prints. So inflation is trending back to where we were back in July of 2023. So, a year and a half ago, inflation's really made zero improvement. Okay. Now, this would justify where the Fed says, inflation is, I don't know if we can use the word transitory without getting in trouble, because that's what got Powell in trouble in the first place. But if it shows that we are actually trending lower again, or getting a reading that's lower, that's probably not a bad thing. So lower inflation, I think, could get the market a little bit more excited this week. A couple things on the technical side. So here is CPI data. Here's core CPI. Okay, and then PPI year over year. And we also have our core PC, which is the end of the month. This is the, kind of the wrong direction we've been talking about. Trueflation calls that bottom in September. There's your readings going up, showing that producer price index year over year is getting stickier, getting worse, not improving. But all of this, from this recent high to this current low, is actually lower than September. So that does make me wonder if, based on where we are at for these year over year readings, if we start to see some traction in the right direction. Okay. So that's why I want to look at the calendar this week to see what the forecast is. It's a modest improvement, 3.3 forecast at 3.2, 3% forecast at 2.9. I would say the market this week can get a little bit more excited if it prints better. So if we print 2.8, 2.7 on the year-over-year CPI, if we print 3.1, 3% on the core CPI, I think the market might be a little bit more excited. Technically speaking, this is in a spot where I could see a couple things playing out just price action wise. Either the market, gaps down on CPI News Wednesday and then fills that gap with some opportunistic plays to the upside, or we have a gap higher that has some follow through. That's probably the trick this week. Is I don't think the market's just going to stay, same price, close and open, close and open. I think we're going to have some gaps this week to deal with. So I wouldn't be surprised if the market either gaps higher on CPI data and then pushes up, or the market gaps lower on CPI and then fills the gap and then actually has some bullishness. But this is the area that I've been talking about now for the last 30 plus days. Connect your lows, connect your lows. This is a spot that I want to take some bites. Okay, I'm going to take some bites in here and start looking to position myself for a little bit of recovery. Let me just go to some straight technicals. So this one, we have the MACD crossover. I'm looking at this histogram really closely to see are we starting to see any more divergence. My relative strength, are we getting close to the oversold, which we are. We're close to that oversold. I have one other workspace I can pull from. Harmonics and pivots is one of my noisier but classic workspaces where I'm looking for oversold conditions. So we got a ton of indicators on this one. Qs also pushing lower today. SPX pushing lower. We got a big demand zone between now and around 54. So between current price and 54, big demand zone. This is the level that I talked about as well. So connect your April and August lows. You can see it. There's demand down here. So that's a good technical indicator. You've got support from these levels. That's a good technical indicator, just driven in price action. If I go to my subgraphs here, I'm not seeing any divergence yet with momentum, but I am getting close to seeing some relative strength getting oversold. So I would say it's close. It's not perfect. It's not going to be perfect. It's impossible to be perfect. But noticing where we've had some relative bounces on this RSI, I don't see, because the market has been selling off pretty aggressively, I don't see the disagreement in the momentum oscillator yet. That may not happen. I would say this: if we go high, low, lower, high, lower, low, then I'm obviously going to be watching to see if there's hidden bullish divergence there, or the market starts to go back up and comes back down, but we have hidden bullish divergence there. That might help signal, a stronger bottom, to be determined. I know that if we have a rally, right? If we have a rally coming to the upside, I think that rally to the upside would still be relatively contained. I don't see the market necessarily going back above 6,000. So I think right now, you look at all the structure here, resistance and support and resistance. You can just see how this market has bounced around quite a bit around that 59.50 level. I would just say round number around 6,000. So between about 5,900 and 6,000, if anybody is long in this market, that to me is a fantastic profit window to get yourself out of some trouble, to start, even considering some deleveraging, to maybe re-up on some puts and hedges, which I will do, because the hedges I put on so far this year have paid out really nicely. And if we come back up to a spot where I would say, okay, well, if we're not going to make all-time highs, we have another flush lower, I want to have another chance to take this market down, right? So it's that simple. I mean, I don't know what's going to be the catalyst this week, how price is going to play out, but like I said, this week, either we have a flush move to the downside. Another technical indicator I just noticed here is the yearly pivot. So we have large demand level, yearly pivot, a little overshoot of the 200 moving average. But until price action ultimately decides that it's going to go back up, we're just watching this like slow death to the downside. The trajectory and the speed in which these bears are taking control it's slowed a little bit. I mean, it was like pretty aggressive there for about 6 or 7 days. That Monday flush we had, and then Tuesday, Wednesday, Thursday, Friday, a lot of indecision. Today is just a slightly lower low, but not by a ton. So watching this carefully. I'm going to keep a close eye on my trade for this morning. I have some SPX running this morning. My 250 is trading for about 225. Got to take profit there in $2. I also have a broken wing down here at 55.85 today. So I'll keep a close eye on that for the morning. But hopefully we're not going too much lower than, I mean, we're already down 111 points from the close on Friday. So market's already reading, a lot of red, right? We've got S&P down almost 2%. Equal weight's down only half of 1%. Qs are down over almost 3%. So I mean, we're getting a pretty nasty sell-off where I would say the market is certainly not loving this. I don't know what it is about these Mondays, but we've had now this is now the second Monday in a row that's just been like, hey, just Monday dumps, I guess. So that's where we're at. All right, let's keep a look at that. So does that make sense? So we got some technical reasons, right? April, August, connect the lows. You got some technical reasons here. You have some demand coming into the market right around that yearly pivot around 56 to 5,400. The yearly pivot's around 55, 59. The good price action would be that price is below the 200 moving average, and then price turns green and gets back above it. That'd be a good indication. Kind of put in a near-term bottom, and then see if the market can rally off of that. Is it possible for the market to rally all the way back to all-time highs again? Maybe. Anything is possible, but this market would have to be way more excited about something optimistic than it is right now. Because right now it doesn't seem like this market is excited about anything. Every day, look at the economic calendar, Trump is on it. And he's not saying anything good. All he's talking about is tariffs, retaliation tariffs, all the executive orders that they've signed. And even the address to Congress last week, it's like you've got one side of the room that doesn't want to do anything to support it, and then you get the other side that would do. I mean, I feel like as lemmings, they'd probably just jump off a cliff if he led them to it. They're all drinking the Kool-Aid right now. So whatever that looks like, it's going to be an interesting 2 years because midterms is the one spot, in our election process, midterms deciding whether or not people like how things are going. So Republicans have the majority. If they want to pass stuff and shove it down the throat of the U.S., then now's the time to do it, and that might come at a fair amount of pain in the markets, right? So the other thing that I think everyone was expecting was like there's going to be a Trump put in the market that these guardrails were going to be he's going to be willing to, if he sees dips in approval ratings or if he sees the markets breaking down equities wise or breaking down bond wise, that he starts to be more vocal on picking things up or trying to jawbone things, which is still to be determined. I mean, I thought I heard this this weekend. It was an interesting podcast to listen to. I think since presidency this year, he's only tweeted referencing the market like less than 5 times. Back in 2016, I think over the course of, I don't know what it was, over the course of his first like 60 to 90 days in office, I think he tweeted over like 100 times talking about the markets. So certainly focusing on tariffs, and the market is not getting the the Trump jawboning like I think they want. So I think we just have to wait. Okay, Mags, another one. Mag 7 is down, right? This is led by Tesla today. Tesla is down to like $240. Yeah, we're 239 on Tesla. That trade, fortunately, was in profit. Now I'm looking at a potential assignment here around 255. This is out to March 21st. This isn't that far away. I don't know if Tesla is going to be something where, this gap gets filled and then the market starts to respond back up. I'm looking to see if this gets greater than 255. So I am watching that closely. Yep. So this one is like Tesla's taking away some of my buying power, which is kind of lame. So, I mean, I don't know. I might end up taking some small losses on Tesla, which is fine, but it'll be frustrating. And officially, so last week, I've kind of maintained that, like, oh, I'm up for the year. I'm up for the year. I mean, it's not like I turned red for the year, which is insanely frustrating. So even despite, some of the hedges and adding an extra like 25 or 30 grand in hedges over the last couple of weeks that have paid out, just this like slow Mag 7 bleed and some of the premiums that I've been selling, it's unsettled. I mean, it's not realized losses, but I am just currently watching like a lot of option positions and seeing how things are going. I mean, the index IV rank is quite high. So obviously I would say about 75% of the time I'm selling premium, 25% of the time maybe buying options with spreads and just trying to mix and match. But this 270, 260, that's a ratio spread on Amex out to April, out to May. I mean, I've got some exposure, and we'll see. But there's definitely going to be some hardcore management. There's going to be some frustration and pain. And I'm just trying to make sure I don't do anything stupid. I mean, that's really what it is I've got to be willing to lick my wounds and accept some losses. I need to make sure I've got plenty of buying power to take some action that I want. If I want to dump positions, it might be in my best interest to dump positions and not take on the necessary or the unnecessary heat. I don't mind taking assignments on some instruments. I think Tesla is something I would be willing to own. I mean, if you were to tell me that we had an opportunity to buy Tesla at a 51% discount, I think they get a lot of traders excited. Now it's like nobody wants to own Tesla. But I still like it. I think the premiums are incredible. But the point is like if I can own this at 50% off, I mean, is it possible that Tesla is going to be as volatile as it was here when we declined back in 2021 to 2023's bottom? Like Tesla took a long time to find a bottom, and that was a 75% pullback. Are we going to do the exact same thing again? Right? I mean, we did break a recent high, but we coming all the way back down to these lows again? I would hope not. I mean, I would hope that this support matters and this support matters. And if we fill some gaps in here around this like $200 zone, that Tesla's going to find some type of support. But momentum and dumping positions and seeing this big rotation on a Mag 7, Tesla could certainly retest what is fair market value, which is showing to be like $130 to $140. So if I do see any real ownership position, it is take the shares, take the assignment, and sell as much premium as I can to work this into a $20, $30, $40 net position. Take some profit on this one. Bigger picture would be that Tesla ultimately carves out lows, and over the next 1 to 2, 5 years, whatever, maybe we get back to these highs. But I don't think it's going to feel great for everyone to think directionally that it's like we're going to get back to all-time highs. Maybe. I mean, I am questioning the market's ability to get back to all-time highs without having the price to earnings multiples on the S&P go back to normal. We got up to 24, 25, 26 times multiple, and I think it probably needs to see a contraction. One thing that's happening right now with cutting government spending and tariffs and deportations, like all these things are going to be contracting growth. And we don't know what's going to happen with the inflation story. I mean, a recession probably lowers inflation, right? Why? Because people are getting laid off, people are going to spend less, and you've got less money chasing goods as opposed to too much money chasing too few goods, right? So anyway, Mag 7. Right now, the decline is, I mean, all of them are selling off. Like Apple's back down post earnings. Amazon down to 192. I have some exposure right here on Amazon as well. This expiration is out to next Friday, not this Friday, but I'm watching this closely. What else do we have? Let's just go down the list. So you got AVGO as well. We had a pop in earnings, but it's faded hard. They had positive news last week. It's not enough. this is now in the Mag 7 picture or whatever you want to call it, Fantastic 8. I don't care. It's one of the $1 trillion companies. Now it's 867 billion. Nvidia's been one of the bigger stories, down to 107. We take a look at Nvidia's found the yearly pivot. I think this is a scary part about Nvidia is the next demand level is all the way down here towards like $90. We're below the 200 moving average. We're coming into some pretty decent support around these August lows. Anything around $100 on Nvidia, I do think is still a pretty good bargain. It's clearly in some trouble. I think fundamentally there's some good support levels. Technically, there's some good support levels, but this is probably my biggest concern about being a stock picker in 2025 is a stock that is good fundamentally like Nvidia, still makes a ton of money, has a ton of cash, has these huge margins, has a huge head start. Nobody's really competing with Nvidia, but the market can price in our reality that can be very, very grim. Nvidia could come down to $80, $70, and you're sitting here like, how the heck is Nvidia down 50% when it's one of the most profitable companies fundamentally in the entire stock market? Doesn't matter. It's what price is, and that would be probably rivaling what happened to Cisco during the dot-com bubble, was down 90+% and still hasn't recovered off those highs 20 plus years later. So just be careful. That's all I'm saying. I don't mind owning some shares of Nvidia, but I'm not trying to sit here and say I'm going to hold it all the way back to all-time highs. If this market has no interest in 2025 trying to get back to all-time highs. If anything, this has been a clear rotation into other sectors. If you look at the sector performance year to date, okay, we've got consumer discretionary in red. We have consumer staples doing pretty well. That's what people need, right? You got healthcare doing pretty well. Materials doing well. Financials have taken a big hit. They were actually up, leading the way. Utilities were doing okay, but now we have S&P index is down year to date wise. We have consumer discretionary getting killed right now because this is going to be the anticipation of people cutting back spending. Whether you're in the top 10%, top 20%, if people are watching the stock market decline, that is going to be a direct correlation whether or not they're continuing to spend and feel like on paper they are having the wealth and having the discretion to spend. Technology is down. I'm staying out of QQQ for the time being. I want to stay out of tech for the time being, outside of some individual stock exposure, but it's not great. Healthcare leading the way this year. Surprising. I'm okay. I've got a little bit of a XLV exposure and J&J as Johnson & Johnson. That's about it. Insurance wise, I'm in PGR and CB, but from compared to last year's performance, right? The last year, energy has given back most. Energy right now is up about 2%. So anyway, there's just a pretty obvious rotation. It's no longer Mag 7. It's no longer tech. There's a rotation into, I don't know if it's necessarily less beta, but I would say that traders, investors, one thing I'm watching closely is going to be 5650. Okay, we got a fresh low on the morning. One thing I'm watching closely here is J&K is high yield bonds. So your AAA, triple B, triple C. Right now, this is still relatively light, which is a good sign. The other thing I'm watching is LQD. This is another thing for investment grade corporate bonds. If this starts to really move lower, and mainly J&K, if this makes an aggressive move lower, then we are still going into a risk off environment. This little slide in the market is the unfortunate thing about having market cap weighted, is because Mag 7 is so large with the 30+% concentration that it had, that even just those stocks individually declining is dragging the indexes with it. Right. So that's the hard part about such high concentration, is that those stocks turn over, 5, 6, 7, 8 stocks that turn over, and the indexes go with it. From peak to trough right now, I think we're in like a 7 to 8% window. Yep. So we're down about 8+% on the S&P this year. We're back down to equal lows on RSP, but it's still actually been holding in there a little bit better. Futures wise, we're at some fresh lows. I actually might take a look at my futures play. I might be looking to take some profit today on futures. I put this trade in for that's That's a 350 point move. You know, I'm not even close, but I'm getting what I want as far as like long call or so long puts and even this bear put spread. If I can take another like $500 to $1,000 in profit, it might just be worth protecting and then getting ready to kind of take those, like maybe keep one eye open, take a little bite, take a little nibble, and hope that CPI data does improve like I think it can, because this is showing in real-time data that we should see some reasonable inflation data improving. The question I'm wondering is it going to improve this week? Right? Like, is the market going to see it as a reason to get excited this week and start to return? Or is it like more pain ahead? We just have a horrible quarter and then the market kind of picks itself off, dusts itself off for April and says, okay, it's Q2, we can have something different. You know, I don't know where the pain is, right? It's either we flip hard for this like February sell-off in this early part of March, and then the seasonality picks up where, you know, middle of March into the end of the March is a bit of recovery. We start talking about this pre-summer push, market stabilizing a little bit more. But yeah, certainly a challenge so far this year. Okay, so let me take a quick peek at that trade's looking good for full profit next Friday. This trade's looking good for a little hedge, up $400. Silver still looking good for some profit. Okay, so question is, doesn't cost me a lot. Right now, got in this trade for $22.75. It's up about 100%. I guess I'll wait. I mean, I want to take profit, but if this also flushes lower, I want to have those hedges. I want to have the hedges running. It's only quarter percent, but if I can get this quarter percent to pay me, you know, 1%, that's at least helping a little bit, helping alleviate some of the red. All right, that's where I'm at. Let me check my SPX for the morning. Still at 51 IV rank. My 250 is trading for 220 or so. Still need a little bit more time. Okay. Been in the trade for just over 2 hours right now. Okay. So watching that closely. I've got a take profit already set. So if it goes off during session, that's good. Let me make sure I don't have any conflict here. I am good for the next probably 15, 20 minutes. All right. That's good. Okay. Let's continue with top down. So S&P is down over 2%, Nasdaq down over 3%, Dow is down less than 1%. This is another one. I actually looked at selling some premium on the Dow today. The IV rank is high, but unless I'm just going to throw in I guess I could consider doing this. Man, it's like I would love to buy the Dow somewhere around a like 9 to 12% correction. So anything like 400. Let me check this really quickly. I might just put on a put on the Dow. So if I go out 51 days, end of the month on the DIA, we can go April 25th. Ugh. I mean, the premium just like falls off so aggressively on the DIA. This is why I love the instrument, but man, the premiums on this, just selling options, it's kind of bogus. So I could sell it $400, but that takes up a lot of buying power. I was only getting $2 of income. That's kind of a crappy trade. So if I flip this over, buy, sell, buy, sell. It's not terrible. If I did this trade, this will only be on my PM accounts. Let me check this one really quickly. I'm probably not going to take this trade. 23.46. Probability profits about 95%. I mean, it's another income trade out to the end of April. Man, it's not a bad trade at all. 390 be my ownership price. If I own the Dow at 390, that's what I thought's pretty safe out of the way. 390 from all-time highs would be a 13.5% correction on the Dow. Okay. 1, 2, 3, 4. This one I think is an IRA account, so I'm probably not going to do that. I don't want to tie up the 40. It'd be 40K cash, but probably these 3 accounts can handle it. So it's not bad. Bid, mid, ask is pretty wide. This is what I'm noticing from today's price action. It's a little bit wider than what I want it to be. But if I can still get over $2 on the trade, it's not a bad income trade for 46 days. Good probability profit. I could repair it. I guess the question I have is, how lucrative is a covered call if I went out about 25 to 30 days? I mean, at the monies this is high implied volatility, but at the monies, $7 to $8. Okay. I think that'd be a pretty easy repair. So let me see here for April 25th. Buy a 400 put, sell a 395, sell 390. That's a 111. Only ties up 23.44 in buying power. I'm going to take this trade. So let me see if I can get 210 to 215 credit on this one. 215 credit just got filled. Now 214, now 213. I said hopefully 210 can fill. Jeez. Well, that was a generous fill on the first account. 210 not filling. 210 did get filled. Okay, good. And last one, 7336. Crikey, that was fast. It's going to work this down. Hopefully I get filled. 209, 208. If I can't get filled over like $2, I'm not going to take this trade. $205, come on. Okay, that just went, that credit mid price went from 215 down to 164. That seems a little nuts, but I'm just going to try to get it down to $2, see if it'll still fill me. If it doesn't, I'll cancel that trade. That's no big deal. 202, 201. All right, I just got filled at $2. Okay, so I'm adding that in. That is a 425 expiration. Buy the 400 put, sell the 395 put, and sell the 390 put. Collected $2 to $2.15 credit. All right, so if I'm assigned on that DIA trade, unlikely assignment, but maybe about maybe a 10 to 15% chance of assignment. But with IV at 64.8, that's pretty high. Man, that's really high. So I should be able to see the expected move that I'm selling premium on is oftentimes going to be much greater than the actual move. So let me go into here. There'll be a 390 minus 5 minus $2. I'd own shares at 383. Okay, and I try to repair that for hopefully, you know, $5 or $10. Okay, keeping a close eye on here. All right, keep going down the list. Russell continues to plummet. Income trade down to 190. We're trading at 202. Watching this one closely. Out to May as well. You know, we are coming into a yearly pivot. We're coming into past resistance, multi-year past resistance, 2022, 2022. This is a January cluster. This is August. This is February. This is August again, 2023. Technically speaking, this area hopefully offers up some type of bounce or at least relief. Russell is down about 17.5%. If it gets really nasty out there until the Fed starts cutting rates, Russell, I mean, I'd like to see this kind of 18 to 20% level, you know, maybe bouncing off of that, offering some relief. But, you know, I've got to be mindful of, yeah, this thing might drop 30%. This might be just a giant range, right? We go from this high to this low. Is this the support that's going to matter, or is it somewhere in between? I don't know. You know, maybe this offers up a short-term bounce. Get out of some of the pain trades and, you know, watch your butt, protect the downside. IWD selling off more. That's your Russell 1000. Then you got your Russell growth down even further. I'm probably not going to touch this one until the Fed starts cutting rates, maybe second half of the year. Top 200 growth or value. This one, if it pulls back into maybe equal lows around 78, I don't mind this one. Again, those small caps, I'm a little skeptical on small caps. Volatility continues. This is a slow burn to the upside, which is pretty unusual for the VIX. You know, usually what we don't see is just like this slow, steady VIX increasing. Usually when VIX goes up, it's like aggressive spikes and then it gets faded. Aggressive spikes, faded, aggressive, faded, aggressive, faded, aggressive, faded, right? Not this time. So definitely different the last couple of, I'd say the last three weeks especially. We just had like a slow and steady VIX that's been on the rise. I do wonder if we have like a little capitulation move to the upside before this thing gets faded. So I just want to keep an eye on this one. VIX above 30 would hopefully be the spot where, okay, we've had some fun with long vol. We get up into maybe the high 20s or 30s, and if VIX starts to fade from there, that could be another way to kind of time any type of short-term rally that the market might give us. Okay, SVXY, another instrument that I'm going to watch carefully simply because this was a July to August decline. And, you know, we've had that steady move on the volatility index. And so if I'm looking to fade that volatility, this is not a bad spot to be looking long. So I may actually put in a trade here around $40 and see. We'll see. This is oftentimes a good one to fade volatility. I'm just curious, like how large of a position. I might take a little bite here at $40, put in a pending buy trade if it gets there. But I also don't need to step in front of a, you know, some impulsive move again on the VIX. If we get like a big spike to like 32 to 35 on the VIX, I just want to be careful, you know, because I don't know I don't know where that puts the SVXY. I'd like to think it's not going to go too much lower than 38.50 because that's where we had that August 5th bottom. But you never know. So I'll just continue to watch this one kind of day by day. Hopefully I get a good opportunity to, you know, fade some volatility. Dollar index, crazy, man. This dollar index is nuts. Could be, I mean, it could be worse. We could have dollar strength in the wake of all this stuff. It could probably get way worse out there. But with the dollar weakening, I wonder if that's going to pull yields down. So oil, not interested in calling the bottom here on oil. My nat gas position is making some fresh highs. So I've got this one potentially getting called away in April at 23 for a nice little win. I could consider rolling this one, which I might end up doing. Take a quick peek at this right now and check my UNG position. Right now, I've got about $500 out of my max. I think it's like $6.75 will be my max profit. If I wanted to roll this, I still have 23 days left in that trade. If I rolled it up 50 cents, I don't know if this is going to fill. If I could roll it up 50 cents and out another 12 days and get another 30 cents, that's not bad. I don't think this isn't right. There's no way. If I roll the strike up by $1, there's no it should be offering, the same amount of credit. So I feel like the bid mid ask is quite wide. So I might just let it get called away. I'll keep an eye on it. Gold, pretty choppy, and I think Nick said this earlier. I mean, the nice thing is gold is being pretty resilient. I don't know if that's a good or bad thing. I mean, obviously, gold is probably one of the better hedges to have right now, simply because it's not Bitcoin. It's not risk. It's not risk appetite. Like gold is safe haven, and this entire run we've seen for 2025 has been because of the safe haven bids. It's been kind of a stockpile. More central banks are trying to keep, whether they're diversifying away from the dollar. It's not Bitcoin. I don't believe necessarily that gold is like the best or better, but it is nice to see that anybody that's bullish in gold, at least something performing wise, is doing okay. So resiliency, but I still think we pull back. I think gold still has a pullback. But wait. Gold futures, silver. Silver's looking fine. I'd like to see silver start making some fresh highs again. We've had a nice little run here where silver had a little bit of a bid to the upside from like 31.20 up to 32.70, and at that time, gold did kind of the same thing. But I want to see if silver can get the upper hand and maybe outperform a little bit and clear this high around 33 and change. Bitcoin, we said watch this previous high. Watch this 75K, right? Watch that 75K if it's going to offer some support. Probably the cleanest trade on Bitcoin right now is if you're calling the bottom, there's your technical resistance becoming support. That's the scary part. The best trade on Bitcoin right now is probably to stay the heck out of the way until this thing starts to break the trend line with some confirmation. That to me is the safer play, less stress, and just stay out of the way. I don't know if Bitcoin is going to be in typical Bitcoin fashion, which is, hey, welcome to a 50% pullback, right? And all of a sudden, all this consolidation here, Bitcoin's back down to like 60 or 50K as the market is kind of deleveraging. We'll see. I know Bitcoin probably trades a lot differently than it has the last decade. There's certainly a lot more securitization. There's more regulation. There's more legitimacy. There's way more flows to it. But gains that have been had, so gains that have been here, accumulation here, gains here, it's like that profit. You're going to see, how diamond hands the world really is about Bitcoin, because now that it's in more places, now that you have, the IBITs and the other ETFs that have had more flow than GLD in its first year, what it took GLD to do 8 years, it took Bitcoin or IBIT 1 year to do. You're going to see how serious people are about it. So 75K previous resistance becoming support. Watch for that level, and certainly watching for a bounce here and maybe a trend line break for some more confirmation. MicroStrategy, all the way up here towards 321, now all the way back down to 250. Just insanely volatile right now. Coinbase at 192. This one I've got a potential level 195. Gosh, it's going to be another one where I'm going to be curious. This is out to March 28th, the end of the month. So we'll see if the market gets a bounce. Maybe there's no assignment here, but give me opportunity to hopefully clean up some of this sell premium. Copper, this trade is looking good. Japanese yen futures making some fresh highs. Nikkei not really doing much. Japanese yen is getting stronger. Is this another kind of deleveraging event? I think the scary thing is that this all happened July to August. Right now, we've already started to see the signs of this thing heading higher. But you got to wonder, like, if we have another deleveraging risk-off event that happens as fast as what it did in those 3 days when the Nikkei went down, 20-something percent, and a 17% chunk of it was in 3 days. You got to wonder, it's like, how bad does capitulation get out there? I don't know. So this is why I'm long Japanese yen. FXY, 6J, That's ways to keep some exposure without getting caught up in the negative swap in the currency market. The DAX is pulling back. Fine. I still think DAX is still a good instrument to buy. It's been one of the best performing indexes this year. My exposure to this is with FEZ just selling some premium. FTSE, previous resistance becoming support, maybe some pullbacks in this dynamic support level. Argentina pulling back a little bit more. I might take a stab at this one, but I'm going to do some research here. I want to find out, like, why would I be investing in Argentina? Because it was a great performer last year. That doesn't mean it repeats that. China pulling back a little bit. Brazil showing some resiliency, which is fine. Mag 7 again, just dumping hard. We did the Apple stuff. Apple, Amazon. I'm going to put in AVGO. There. So Amazon dropping. AVGO had positive earnings last week, but it's fading. Google down to some fresh lows with some gaps. Meta continuing to work its way back to this 200 moving average. This one, again, may offer a bounce. I'm just not that interested in calling that bounce or bottom. If we go, I don't know. I mean, if we bounce here, I could see a short-term rally, but I don't know if this market is able to get back to highs and Meta's going to do it. So I'd almost rather see something like this, a high to low, lower high to lower low, and then start get positioned with Meta having some reasonable pullbacks. This is past resistance becoming support. I know that's a huge cleanse, by the way, but it's not about like, oh, the company is. I mean, look, Meta is insanely profitable, but it's having a 700+% rally and throwing on a 1 fib. To me, this is all it is, right? So we either pull back to like this 25 to 50% zone, and if you're willing to take some bites at it, then I'm sure Meta's fine. But technically speaking, I'd love a chance to buy this thing under like 450. 450 to 350, I could position myself and justify like a medium to long-term position on Meta. Microsoft, right now trading at 380. Another one that has some exposure. This one is done for profit already. This one is 375. Son of a gun. This is going to be an interesting week for Microsoft. I don't really want the assignment. If I take it, I take it, but I don't want it. I can always dump it for a small loss, but there'd be an assignment at 375 if I took the shares. So if Microsoft gets below 375, watch for potential one assignment. All right, so chart alarm set at 375 on Microsoft. Netflix working its way down to the 200 moving average. This one should be fine all the way down here to 655. Not really worried about that price. NVIDIA 106. A lot of demand in the 190 zone. I've got some ratio spreads out to April. Tesla just selling off like crazy, down 50+%. Potential assignment next Friday if we're below 255. We'll see how eager people are to come into the markets and buy any of this stuff. I mean, it's on sale, but Tesla, technically speaking, 220. 220. I mean, I'd say that's a good technical bounce. If we're going to have a bigger capitulation, then we're talking Tesla back below $200, which would feel pretty terrible. And I don't know if this is like some weird sentiment play against Elon Musk where it's like, he comes in as Doge and he's just offering up chainsaw firing and terminations and shaking things up in DC. So I have no idea if this is a play on that or just because it's overvalued. Berkshire Hathaway off of recent all-time highs. Resiliency is good in this one. Let's go 10-year. 10-year, a little bit of a 3 to 4 day rally. I'd like to see this thing flush down to some fresh lows this week. That'd be pretty encouraging, especially if inflation readings are lower. It'd be nice to see a fresh low on the 10-year. So let's see if we get some fresh lows. Hopefully we do. I'd love to see some fresh lows. Especially if we're facing this like recession. I mean, I'd say the risk of recession is certainly not zero. I know this has been a heated topic for the last, 2-3 years. Markets are climbing the wall of worry. Everyone thinks it's going to be a recession. Then it's not. And now nobody thinks it's going to be a recession, and that's certainly not the case. Like sentiment has made some pretty aggressive swings. But I'm going to watch 10-year yield. Futures wise, like I said, as long as JNK is not dropping off a cliff, I think we still have some liquidity in the market, so keep a close eye on that. All the jobless stuff, continuing jobless claims, core PCE, all these like data points we've been watching month after month. I mean, the big one this week is going to be CPI, PPI for Wednesday, Thursday. China, Alibaba still hanging in there. Baidu still hanging in there. FXY back up towards September highs. I mean, China's showing some pretty decent resiliency. JD, oh baby. So I need this to stay above $40. It's at 40.60. Man, this is crazy. This went up to $46 and has faded hard. JD had positive earnings. What the heck? Well, I'll just keep repairing it, I guess. I need it to, if it stays above $40, to get it called away next Friday. So if it doesn't, then I'll keep selling premium, lower this cost basis a little bit deeper if I can. Schwab dividend, Schwab growth. Dividends looking attractive. This is why I bought a bunch of shares of this 200 moving average. So not a big mover, but from a $27 to $29 position, it's not awful. Just got filled in SPX for profit. Thank God. Trade took 2.5 hours this morning. Good. So taking the profit there. All right, let me do a quick update. Okay, Schwab growth, staying out of growth, going into dividends. This is your defense, right? You want defense, you want lower beta, and you want dividends. That's going to be adding some resiliency to your portfolio. I don't think that's a bad way to go. My SCHG, this would be SCHD positions. So I'm in both. I'm up $1,100 on dividends, and I'm down, $2,000 on growth. So it's going to wait. I think what I'm going to do today is I'll look at the basket of SCHD, and I'll see, maybe this is better exposure for me rather than trying to play a bunch on the Dow. Is I just buy this and buy this basket and let this current kind of 3 to 6 to 12 month environment play out where the market is getting way more defensive right now. This also has a decent dividend around 3.49%. The beta is a 0.54. So the nice thing about this one is, if the S&P moves a point, this is only moving about half a point. So you're taking away a lot of that unnecessary scary volatility when things are getting more elevated. But you sacrifice it both ways. When the S&P rips up, 50 points or 100 points, this thing's going a fraction of that. So it's just playing for safety. But a 3.5% kicker is not the worst thing. But I think this one is certainly looking a lot better than SCHG. And then we got some individual stocks. So, all right, I'll go and wrap up my segment there. I got another class coming up at 11:30. We'll be back and do it again tomorrow. Okay. Ford. Ford at 920, that gap up to $13. I mean, maybe. It's the delay in tariffs or the exemption of tariffs, right, or concessions in tariffs that would maybe help Ford. I did read something last week that Walgreens is potentially in the works to get bought out. There's going to be, let me see if I still have my shares of Walgreens. I do. So I still have shares of Walgreens, and I was reading they're looking to get bought out at like an 8% premium. So most likely that position will transfer into whoever owns them unless they're being taken private. If they're getting bought out and it still stays public, then it's all good. So, all right, I'll let you go. I'll see you tomorrow. Thanks, everybody. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.